Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming your way with the market recap for the 17th of December. It was red, and it was red, and it was red. Not a whole lot of bullish activity going on overall here today, as I'm sure you're already aware, and as we will take a look at together. Before we do, just a quick look ahead to earnings. You have Oracle and Red Hat coming out tonight for S&P 500 companies, and then Darden Restaurants, DRI, before tomorrow's open. So a handful of S&P 500 companies, but I don't know that the market's probably going to care all that much. It seems like it got other fits to throw. And I hope everybody is doing well and had a great day trading on that bearish side of things. We broke, of course, that 26, closing below it, by a hair on Friday. Overnight in the futures market, we kind of gapped down a little bit for the open, and we really just kind of struggled all day long as we go into an intraday time frame. You saw a little bit of a rally on the opening. And good afternoon, Dustin. Hope you're doing well, buddy. And I hope it was an interesting day. It was a fun day if you're a bear. But we saw a little bit of a rally. But the problem is there was really no support, on the intraday. So it looked very much, like a retracement, a bearish retracement. Once that kind of kicked in really across the board, we just kind of sold, and sold some more. Things are looking weak. And what's crazy as we kind of look at the S&P, we kind of are right at that support level. I don't think you can call this a break of this most, I think we definitely broke this, right? But we're now kind of testing that next level of support. I don't think it's clear enough one way or another to be saying it clearly broke. Personally, I don't think you can call that a break. But what's crazy, if you look at this on a weekly time frame, if that fails, there are no major levels of support on the S&P for a while. I mean, you're talking 200 weekly moving averages, major breakout point, back in the low 20s, 21, there is not a lot of support. If this support does falter, I'm not saying that we're going to free fall to that price point, of course, but just kind of thinking, where are the buyers potentially interested in from a pricing point of view? All of the support levels would be gone in the scenario that we broke through this. New ones would have to develop, and that's what's crazy looking at the S&P. It's kind of, it better, again, we've said this a few times, but if the bulls want to keep control of this thing, they better move quickly, because I can't see anything support-wise if this thing falters right through here. We'll have to wait and see. And of course, it is Fed week, so maybe there will be some reaction or overreaction to that as we get into Wednesday. So maybe that can be something that will prompt. But as of right now, I mean, yuck. It's a great day for your bearish breakdowns, your retracement from a week ago, right? Yeah, it was a day, Justin, no doubt. So as you move over into the NASDAQ, unlike the S&P, and we might kind of just have to use these guys together, because if we continue to see selling pressure, the S&P is probably going to break that support level, right? Whereas the NASDAQ has a little ways to go before it takes a shot at support. So it's very possible the S&P, if we do continue to sell, which it's hard to see why people are going to run out and start buying tomorrow. They might, but technically it's hard to see why they would. We might be using the NASDAQ, hilariously, as something to prop us up. We did hold that swing low support level, kind of popping off of that zone in the intraday, but really we've got a little bit of room to go. And I think, for a lot of folks, we can kind of say that this is a support break. Still some room to the downside before we challenge that, at least what I would consider our next real level of support. Again, coming to a weekly time frame makes that look a little easier maybe to identify. So, we've got some room still. Over in the Dow, clearly took out this swing low that we popped off of last time we were selling off. Again, we have a little room to go before our next level of support here in the Dow Jones, much like the NASDAQ. That's important. If you look at this chart, this looks like a potential M on a weekly time frame, right? If we take out this support level here, we're at important price points. I really do believe that across the board in the market. And then, of course, the Russell, who's been kind of the weakest, broke down earlier, broke down further today, clearly took out 14 and really kind of slid all day long. Probably 1350 is your next real level of support on the Russell. It was a consolidation zone for a little while, back in the day. So that's probably the next level, and then coming into a weekly time frame to see what might catch us next. We've done this before, but it's probably this 13, which is another breakout point going back here. So I would kind of be looking at 1350 as kind of the next level there on the Russell. I mean, obviously, all of these indexes to one extent or another are not bull indexes, right? So, we are showing an absolute ton of weakness across the board. And it hit pretty much everything today. Real estate got hit hard. Healthcare got hit hard. So it wasn't, it was willing to go after everybody equally today. Some charts held up a little bit better than others. For example, over in the material sector, we were able to hold onto that swing low. Now, again, we've looked at this and talked about this before, but I think it's very much worthwhile to do so. This should be a pretty respectable level, right, of support that we're kind of dealing with. It's not lining up perfectly with this old breakout point, but that wasn't kind of a perfect breakout point. But really, if you kind of look at where we are on this was the general ballpark of an old breakout. It has been holding up. Again, if this falters, probably more room to the downside in this sector. But it was able to hold, which means a couple of things potentially for stocks within that area. One, if we're looking for bearish breakdowns, some of them may not have taken out support yet. Or two, if we're looking for support bounces, well, support's still there. So I don't know how you're doing that tomorrow morning. I know I personally wouldn't be, but that doesn't mean nobody will be doing that. So we were able to hold support over in the material sector. In the energy sector, on the other hand, a very, in my opinion, clear and easy to call break. We definitely, cleanly broke that support level that had been kind of propping us up. Taking a little bit of a further look here, really, there's more downside into the 59 range, which is a fair amount on the ETF before we get to our, maybe our next level of support. And then we're going to have to start picking around bottoms in here if that falters. This continues to be a weak area. And of course, crude broke through 50 today, not doing the energy sector any favors. No doubt about that, but very clean, in my opinion, at least clean break to the downside over in the energy sector. We did kind of hit that bottom, this previous swing over in the financials. For a little while, it was, in the green, technically during the halftime show. It was the one sector that was. It didn't end that way, but certainly wasn't down near as much as some other things. But we are at a support level. I mean, I would love to see a retracement within the financial sector. That would be one of the things that I'm going to ask for Christmas, a nice 3-day retracement in the financial sector. Maybe it will happen off of this support level. If this support can't hold, again, we've got more room to the downside. And this is something we're seeing across the board. There's still room if these support levels, falter, which let's call it what it is. Or I'm not betting money on any of them. I might not bet against them, but I'm certainly not betting on them as a support bounce type of a trade. There's room to the downside. Over in the industrials, again, much like energy, I think you can say that we kind of closed where we were looking. But the question with this one, and it might be better to look at this one specifically on a weekly time frame, because there's a lot of noise, kind of at those old tops in there. I think we can look at this and say this was a breakout point, and this is a break below that breakout point. I think you can call this a break, much like you could call energy a break. But I wouldn't really argue too much if you didn't. If you wanted a little bit more movement before you were comfortable saying that it had broke, I wouldn't have any objection to that whatsoever. Still plenty of room to the downside over in the industrials, whether you think it's broke or needs to see a little more downward movement before you are comfortable calling it that. There is, again, a lot more room before we get to new levels of support. Tech, basically, much like is prone to do with the NASDAQ, came down along with the NASDAQ and the market, and did take out that support level. So that little potential shift in momentum that seemed like at least a possibility a week ago, we got to hit the reset button all over again. And so that's certainly something to watch for. Again, this is, to me, a little harder to call a clean break than something like energy, because this is definitely a zone. And we've seen that a lot, in this volatile market, where it's not a number, it's a zone, right? And so I'm always real picky to make sure that at least I think it's a clear break. And this one's a little tougher read. We can't say it cleanly broke the low, and that does have to throw a little bit of a flag. But I don't think I'm comfortable saying it's taken out all of that just yet. Personally, it's close. It could happen tomorrow. I won't be surprised. But however you're reading that, this is a pretty substantial area. When we look at it a longer time frame of support, this should be something that people are interested in. But gosh, how are they going to be? But of course, that's not saying this is going to happen, but when everybody gives up hope, that's when the buyers will pop in, right? So staples, not immune to it at all. They clearly took out that support level here today and got involved with the selling in the market. I have to call that a bearish signal. Maybe it was just because of the type of day it was. Everything was selling. I get that. I've not really loved this sector for a while, as you guys know. This break of support, I do think you have to call it a bearish signal, at least on the shorter term basis. If we come into a weekly time frame, in here, maybe we can start to make a little bit of a different argument if we start to see some upward movement, right? Maybe we are kind of coming into a longer term time frame trend line that might be developing. I do think that is okay to be looking for. I don't really feel like that's what I want to be doing right now, but I would understand if that is how you were looking at it. This trend line, again, it's not perfect, and we definitely need to see some development on it, I think, no matter where we stand in the days to come. Also kind of catching its footing at the 200-day moving average for whatever that is worth. Again, if this is going to bounce off of this 200, off of this trend line, it's probably going to have to do it from an overall sector point of view without me. I think, I wasn't loving it before it broke support. And when it broke support, I can't get on board with it. Utilities, again, another one down over 3% as they got in the game here today. So our defensives, not only did they get caught up in things, but there were some pretty, good sized moves within the defensive sector. Now, from a technical point of view, we've been watching the utility sector bump its head at resistance for over a week now. So I doubt any of us here are surprised that we pulled back. I know I'm certainly not surprised, that we pulled back off of resistance. Sooner or later, we were either going to break through or pull back, right? We were going to hang out at resistance forever. I am, of course, surprised that it went all the way back down to that old breakout zone in one day. Of course, I wouldn't have expected it to move that quickly, but here we are, very interested in this price. As we kind of talked about last week, a pullback in the utilities is definitely something I was wanting to see happen. Don't love how it developed today. Definitely need another candle going into tomorrow or later in the week before I feel comfortable. But if I get some buy signals, I could definitely see being interested in utilities especially from a credit spread bull put credit spread point of view next week over the holidays, when basically nobody's doing anything, right? So we're still a couple of days away. Watch that 50-day moving average, this old zone. Again, it was tough. We were, was it 55? Was it 55.50? Let's just see how we develop off of it. Right now, as long as we hold that 50, I'm going to be kind of looking at this as a pullback opportunity within the utility sector. Personally, just don't think we're well, we need at least another day, right? We need a doji, a hammer, some momentum to shift because hey, like the price, but hate how we got there, right? A free fall of 3% in utilities. Not like these are volatile stocks as a general rule. Over in healthcare, very interesting chart developing, of course, gap down just below support on the open. I don't know if you guys were following along. I know you guys probably don't, sit and stare at healthcare as much as I do, but it gapped right below support on the open, cleanly breaking that, and very easily rolled into the 200, where it did have a little bit of an intraday rally kind of early in the day before giving up and working back towards this support level. Now, this is kind of a wonky looking chart when we look at like this, but look at this weekly chart. If we fail, my beloved healthcare, I'm going to love you just for different reasons. This is going, to me at least, going to look like a very clean and easy to see M type of a pattern. Yeah, it's probably easiest to see if we keep it on the weekly chart, where we drop, work back into resistance, pull back to that same support. That's a break below this support, in my opinion, is pretty bearish. Now, there were some bad news, which prompted, some of the selling, with this, of course, with the Obamacare ruling being a thing, and I don't know what that means. I try not to pay too much. I like to be aware, but I don't like to develop an opinion on the news because that's just how I like to approach it. But certainly, at least short term, it clearly did have an impact today. Watch that support level. If that breaks, whether it's a bigger thing or not, there is room to the downside within that sector, and I've liked it for a long time, and I'll like it again. But if it breaks that support level, I won't like it as a bull, at least not until it gets back above that. So if that falters, to me at least, there's definitely some downside room with that sector. And if it holds, well, again, it hasn't broke yet, right? We should plan as if it's going to and act as if it's not going to, right? That's kind of the philosophy I take when it comes to this stuff. Plan accordingly and act accordingly. But it's an important price point in my mind for that. Over in the discretionary, again, I think you can say that we did cleanly get on Friday. We were debating, well, not really, but we were saying there could be a debate whether, this was support or this was support. At least today, we don't have to have it breaking below and closing that, a bearish signal for sure, because this was starting to look kind of sideways. And again, let's see how we react, going into tomorrow. I certainly upward movement. I don't think you buy into this this type of a chart by any means, but yeah, where maybe it was trying to bottom out, it's not looking so great here today. So I mean, across the board, it was just brutal here today. Real estate, it tried and tried and tried for those few days to kind of work back after kind of taking out that trend line again. It got caught up pretty nicely. This one's tough. I have a hard time seeing a really clean chart pattern developing that I would be interested in one way or another this week, really. If it's going to, take a nice sizable bounce, I would understand. And if there's things breaking resistance within the sector, I didn't check them, but like AMT, wasn't American Tower right at some resistance before all of this happened? I'm sure so I mean, it's a long ways away, but a break of resistance within the sector, if I see some upward movement, could be something I'd be open to. But I really have a hard time jumping in off of a bounce to say we get a nice confirmation candle, a hammer, a doji, small body candle tomorrow. I have a hard time thinking I'm going to get on board as a bull. From a bearish point of view, I don't think I'm quite ready to go bearish. I definitely call this a bearish signal, but even if I am, we're very extended now, and so I think best case scenario, I'm bearish. Let it rally back up into 33 or thereabouts and look for bearish opportunities. So for me, I have a hard time really seeing a path for good trade setups, at least as I look at the chart. And I didn't go through all the different real estate companies today, so there might be some out there that look nice, but right now, looking at the ETF, I just have a hard time seeing how we could get a good technical pattern in the next few days. Maybe it'll surprise me, but I just don't see it. And lastly, over in communication services, again, relatively speaking, holding up a little bit better maybe than some other things via, not breaking the actual bottom. But I mean, it's bad when you're one of the better looking things on the day because you didn't break your bottom. But there we are. Still, again, pretty bearish. Those charts, as we've talked and looked, and you've looked at on your own and in the halftime report and all of that fun stuff, they're still struggling tremendously as a whole. Although Facebook, was putting up a reasonable fight. Over at the 200, or I'm sorry, the 50-day moving average. Here to these last few days, seeing a little bit of downward movement. I'm going to be kind of keeping an eye on this little trend line. And you probably notice as you look at my charts a lot of times I hide these trend lines, and when they falter, that's kind of where I look for those entries. This trend line breaks. I know a lot of people are still looking at Facebook bearish. I know several personally who are looking at that perspective, but it has been kind of showing a little bit of momentum. It put in that higher low and that higher high before smashing its head into the 50-day moving average. Be interesting to see. I think it will be interesting to see going forward if we catch this little trend line and take another run breaking out, which I would call a buy signal, or if we break below this trend, which of course I would call a sell signal. Of course I would. So, but very interesting, chart on Facebook, I thought right now. So I mean, it was yeah. So yeah, Len, not much of a move. There were a few out there that weren't moving, but man, it was a bigger candle than it felt like. As I kind of look at the end result, for the most part, broadly speaking, there was pretty good selling. But again, kind of like Friday, just kind of seemed to be at a nice even pace, as opposed to all in 15 minutes type of a deal that we've seen a lot as of late. I mean, clearly, guys, you don't need me to tell you this. I mean, bulls are running scared. Bears are in firm control. Doesn't mean we can't rally. Doesn't mean we can't, see upward movement as early as tomorrow. But I mean, at the end of the day, as long as, we continue to look like this, we probably, again, expect what's happening to continue to happen, right? Until it stops is a good philosophy to have. Another big spike up in the VIX, as of course, we break support, you're probably going to see spikes in the VIX when we break it in the overall market. And of course, we saw it here today. So, I mean, we're definitely still, not feeling great about things. Again, I still think the way to be looking overall at this market is using theta to your advantage. When you're looking at new trade setups, for me at least, I'm looking at bearish credit spreads versus bullish as a general rule, not exclusively, obviously. And you always want to be open to each way, and of course keep your portfolio where you want it. But really, that philosophy has been working. As far as being bearish with our credit spreads, yeah, we've had some swings that thought, well, I might be getting close, but they say the trend is your friend for a reason, and sometimes we get in our own heads, right? And say, well, it can't. We're pretty good about not going against things. As a group, I've found traders are pretty good at not going against the trend, but sometimes they have a hard time going with it, and because we get in our own head, well, it's already dropped so much or ran up so much. How much more can it go? Whenever I say that, the question I immediately ask to myself next is, why can't it go any further? And almost exclusively, I just have a dumb look on my face, and I don't have an intelligent answer, because Frank says so is not an intelligent answer. The market cares very little about my opinion, I have come to know over the years. So over in the dollar, a little bit of back and forth as we kind of continue to consolidate just below that resistance level. I think that's kind of what we should expect, that's showing some overall strength. Individual currencies, I can understand working into the dollar. Overall, a break, I think, is really the bullish signal that I want to see over there. Gold showing some nice movement off of that little test that we saw here last week of that breakout point. Again, I don't really think things have changed dramatically over here. We're holding the break. As long as that happens, you're anywhere, in my mind, you're anywhere from neutral to bullish. I don't have any objection to people moving in. Personally, I do think the 200 is kind of where we should kind of be eyeballing the next resistance and the next, bull signal if we didn't get in off of this pullback. If I'm bullish, or if I'm in something like I say I have a call option on GLD, I wouldn't be opposed personally to converting it into a bull call as it approaches that 200 because, well, 200 might cause some trouble. It might not, but I know it has in the past, right? So that's, for me, nothing really has changed. Same with silver. We're still trying to cleanly break. I think it's got to be 15. I think that's just the number that traders are looking at. But again, overall, we are working towards the top end of this trading range. And so if you're in it, you're probably fairly happy with where you are. If you're not, I have a hard time thinking today is the day to buy it, because basically it has to break out for you to make money. And I don't think you want to put yourself in that spot personally. Natural gas, another rough open over the weekend, gap down on the open, and really just again struggled. I mean, all of a sudden, it's not caring about 4, which seemed like that was an area that traders were going to look at. We now are thinking, hey, if we get back there, we have to seriously consider resistance. We're a ways away, and really, other than this little short-term top that we saw after our gap up, when we kind of gapped through that nice, beautiful, sideways pattern there, that's really, there's not a lot until that point again. I think you have to be really careful with natural gas right now. I mean, I still have a hard time betting against it right now, but I certainly wouldn't be betting on it right now with the price action that we're seeing. I mean, the simple reality is now all of a sudden, the volatility is still there, but we're making lower highs and lower lows. We're breaking support. This seems like a long time ago now, right? So this was it wasn't that long ago. It was November, for goodness sakes. But it seems like a long time ago now. It's trying to shake itself out. And honestly, I don't have a strong opinion one way or another. I think the chart is kind of an ugly mess. And I don't think there's a great swing trading setup that I can even see developing in the short term on it. If we would have had a nice clean pullback into the 50, that could have been one I would have been interested in. We clearly didn't get that. If we're looking at it from buy side, I think maybe the first thing you're looking for is kind of getting back on top of this old breakout, because again, we have to think about, is this a failed breakout, right? This breakout was beautiful. It had a good run, but now all of a sudden we pulled back to it and we're right below it. So maybe a good way to look at it, as if you are thinking about it from a bullish point of view, is getting back above that, because hey, maybe it was just a down day, right? If we can push our way back above it, maybe it looks like a test of that breakout point. We'll follow along together, but I have a hard time seeing great trade setups in that area right now developing. And lastly, our old friends in crude took out $50 today. Let's take a peek at it on its intraday time frame to kind of see where it went. And there was our 50. So we pulled back into the 50 range early in the day, rallied up, worked our way down. And as soon as it took out that low, this is what we got. So we clearly weren't the only people out there looking at selling crude, breaking $50. No doubt about that. There was a lot of selling once we took out that intraday low today, which coincided with taking out $50. Bears firmly back in control over here. Not a lot of support. Again, for me at least, I don't really see any support until we get into that 43, 44 range, which is a long ways away from where we currently are. Now, it's just one day. And hey, again, your rules are going to, matter here. We did close. We continue to see downward movement. Per my rules, that would say that this is a bearish breakdown. Per your rules, it, or may not. I don't know. But I do think no matter how you spin it, clearly we broke 50, and clearly that is a bearish signal after going sideways within a very bearish overall movement, taking 5 and breaking down. So again, I don't know where, how you can be bullish on this chart. Again, if you were bullish going into this, either you were betting on 50 holding and thinking risk to reward. Well, hey, if it holds, I got a lot of upside. If it breaks, I get out and lose a little bit of money. That's probably already happened if you're on that side of things, or you're waiting for it to break resistance and it hasn't happened yet. And well, if that's still how you feel, fair enough. It's going to have to, this would have to be a fake out, and we have to get back into this range, and we have to get back to resistance and have to break back through it. So if your read was a buy above 55, I don't think there's anything wrong with continuing to look at that number right now, I just don't think we should probably expect it to happen in the short term, at least. But we'll have to see where we go. But again, clearly, and we saw, that 15-minute candle. I mean, it was selling, once we took that out, because of course it was, that was an easy call, at least short term. Everybody, and I met nobody who didn't say $50 on crude, like not one person. So, whether they were buying off of 50, I didn't really know very many people doing that, or looking to go short below 50. 50 was always the number people were saying. So we weren't alone there. So, I mean, it's rough right now if you're a bull. Now, if you're a bear, you're feeling pretty good about things, right? Of course, and the trend has been in that way. We've showing a lot of weakness. Let's not overreact. It's not the end of the world or anything like that. Let's not assume that we're going to tank another 3% tomorrow just because today was nasty. But of course, let's be very cautious from a bullish point of view, because we have a lot of negative momentum. And I know Tim and Cody went through a lot of the individual components of these ETFs in the halftime report today. And I mean, chart after chart, and the same thing that I saw last week and I see every day. And I brought it up, I think, Friday. Everything is just ugly. The bearish setups are all over the place. Bullish ones are just virtually non-existent. We're showing a lot of weakness in the market, no doubt about it, as we move into Christmas time. Wow, a week from now, Christmas Eve, crazy. Well, I know what the market wants for Christmas, and maybe it's a day off. I don't know. So, but ladies and gentlemen, that will do us for the market recap today. But as always, it is certainly my pleasure, and I do appreciate everybody's time. Be sure to subscribe to the channel and hit that notification bell if you haven't already. And also be sure to follow us over at Tackle Trading on Twitter to keep up with some of the things that we're running into each and every market day. If you enjoyed the market recap, it is always helpful and appreciated if you give it a thumbs up to let us know that we are on the right track over here. So with that, ladies and gentlemen, get out of here. Happy trading, and I will see you all in the next one. Thanks, guys. You too, Fortino. Have a good week. Have a good afternoon, everybody. See you tomorrow.